I can't think of a time in history when gold prices are so resilient and there's so many macro forces behind it. Gold is, for a reason, trading close to its all-time highs, right? 1800, call it 2000 or so. Okay, well, it's not too far from that. Why would a property that has gold in the ground be worth nothing, right? I mean, that to me is off. And that usually changes when you see a spike in gold prices. And if you get gold breaking out and go to $25,000, $3,000 an ounce, more people are going to think the same way. More people. No, investing is not about people agreeing with you today. It's people agreeing with you in the future. And, if more people agree with you that gold has a value and it could potentially be worth $3,000 an ounce, and
Tavi Costa, partner and portfolio manager at Crescat Capital, has shared an interesting perspective on the green revolution and its potential impact on the precious metals market, particularly gold and silver. Gold prices recently experienced a bounce back after a 9-day losing streak, partly thanks to a technical rebound. However, the release of robust U.S. jobs data has raised concerns about the possibility of another U.S. interest rate hike, which has kept gold on course for its second consecutive weekly drop. Tavi sees a potentially intriguing investment opportunity if gold prices rise significantly. This surge could significantly increase the value of properties with gold reserves still in the ground, making them more attractive to investors. When it comes to silver, analysts are optimistic about its prospects. They believe that robust demand from the solar industry, combined with limited supply growth from mining, will bolster silver prices once the higher global interest rates end. Ed Moya, a senior market analyst at brokerage OANDA, points out that silver could experience its largest deficit in over a decade, primarily because mining production can't keep up with demand, especially from the booming solar sector. The Silver Institute reported a deficit of 237.7 million ounces in the silver market in 2022, and these deficits are expected to persist in the years ahead. Tavi's perspective is aligned with this notion of a green revolution. As the demand for silver surges in response to its vital role in the renewable energy and solar industries, the market may need help to keep up with this newfound demand, potentially resulting in a supply shortage. This, in turn, could drive silver prices even higher. Before diving into Tavi Costa's interview with Soar Financially, subscribe to our channel and give this video a big thumbs up.
I personally think the green revolution will happen, but will be tempered down massively as we do more math about how much we're going to need and how that's going to start driving value of things higher, and it becomes unsustainable to do those transitions. And so I think that's going to be a part of the agenda that's going to be revalue over time. Although it may be pushed into most of the politicians and so forth, I think that is not in line with I mean, if we're going to go, solar panels and so forth, boy, we're going to have them. I mean, it's just South 32, a miner, just put out a research just to give an example of silver demand if we're going to have solar panels everywhere, and would require about an additional $1 billion ounces of silver per year of demand. Okay, 1 billion ounces of silver per year. It's it would be like two absolutely major discoveries in the next every year, and we haven't had one of those in decades, just to put that into perspective. And so how we're going to do that, then that's one of them. Silver is definitely in that camp. I think if I knew which one is the most, I would probably be very focused on that. I think gold is going to surprise a lot of people. I think gold is going to surprise a lot of people. Not much on the price appreciation potential relative to other minerals, but potentially the value of owning gold in the ground. I think that's going to be an interesting way to make a lot of money. A lot of people, I can't think of a time in history when gold prices are so resilient and there's so many macro forces behind it. And gold is, for a reason, trading close to its all-time highs, right? 1800, call it, what's the all-time highs? It was 2000 or so. Okay, well, it's not too far from that. Why would a property that has gold in the ground be worth nothing, right? I mean, that to me is off. And that usually changes when you see a spike in gold prices. And if you get gold breaking out and go to $3,000 an ounce, more people are going to think the same way. More people. No, investing is not about people agreeing with you today. It's people agreeing with you in the future. And, if more people agree with you that gold has a value and could potentially be worth $3,000 an ounce and more, then what does that make you think that a property that has gold in the ground, that gold is now massively economically viable right now because of the value of the metal itself? What would that do to those opportunities? To me, that's something very asymmetric that I really think poses a very important opportunity for investors to profit from the current imbalances in the world right now.
Gold mining stocks have been facing a tough time lately, even though gold prices have been robust and even hit record highs. This discrepancy has led to gold mining stocks being deeply undervalued. To put this into perspective, look at the current ratio between the price of gold and gold mining stocks, as represented by the NYSE Arca Gold Mining Index. It's not too far off historic lows last seen in 2015. Moreover, gold mining stocks have been underperforming gold for about a decade now. Tavi Costa believes this undervaluation of gold mining companies compared to other mining firms could be a potential catalyst for a strong bull market in gold. In essence, when gold mining stocks are undervalued relative to other mining stocks, it historically has signaled a favorable environment for gold's performance.
Well, there's clearly a trend for currency debasement and all that. So gold to me look very attractive naturally, just on that front. I know the issue with 60/40 portfolios. They're going to be looking for a downside risk. They're going to be looking for an alternative for treasuries. Central banks have been accumulating the asset like we've never seen before. We have a debt problem. We have a fiscal deficit problem. I can go on and on and on the reasons why gold should do very well. So, and then I looked at the valuation of companies in the metals and mining space. And despite the fact that everything is depressed and distressed, the gold space is even more distressed. And you're seeing majors shifting away from gold and starting to produce copper and all that. I wouldn't move away from the gold space either. And so historically, that tends to cause gold bull markets, secular moves. So to me, that's really attractive. An exploration world, exploring for gold is really cheap right now. And so, the risk reward of making a lot of little bets in kind of a hybrid venture capital approach in the gold space is very attractive. And the reason for that is you can find, very high quality deposits that likely have gold that you can explore for much cheaper. Because when you're exploring for copper and other things, base metals, you got to go a lot deeper to find those. And that means more costly for drilling and so forth. And so for gold, it's actually really cheap, and the probability is high that you can find if you have the right expert to help you on that. So, which I think we do. And so that's why my focus on gold is kind of clear. Silver, it's another clear winner in my view. It's a monetary asset, inflationary asset. It falls into the green revolution. I know supply is extremely constrained. It's difficult to find high-grade silver. So to me, that's a clear winner as well. We could see a return to a deflationary environment. And what's interesting about gold is that gold can actually do very well in a deflationary environment too. So that is another reason when you're ranking those higher probabilities. And I know gold prices are much higher than some other commodities like silver, but the difference is a gold property is not at that high level. It's actually much lower than even silver prices. And so that's where the trade-off is. And so in a world where gold does very well, even in a deflationary shock, and we go back to a more disinflationary environment where inflation is not really entrenched, and we go back to a globalized environment, the tensions geopolitically improve. It's not my view, but let's just say we are in that world, and reshoring is a necessary. Housing market declines because we're seeing a deflationary shock. And things go back to more normal, and inequality is readjusted because asset prices have come down drastically. If we're living in that world, then I could be wrong in a lot of things. I could be wrong about oil. I could be wrong about copper. I could be wrong about the green revolution. So, how do I adjust that? Well, I have a larger percentage of my portfolio in gold. I have very high degree of shorts in the equity markets because I think that would be the way I could be wrong on things.
While the stock market was experiencing a decline from October 2007 to March 2008, gold prices were on a rally. It's true that when Lehman Brothers went bankrupt, both the price of gold and equities initially declined as cash became the preferred asset. However, what's interesting is that gold hit its bottom and started its rally a few months before the U.S. stock market did. This indicates that gold has the potential to act as a safe haven asset even during times of financial turmoil. Tavi Costa, a respected voice in the investment world, emphasizes an important aspect of gold's appeal, its ability to perform well even in a deflationary environment. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.